financial institutions are business organizations serving as a link between savers and investors and so help in the credit allocation process. Financial institutions consist of both banking related institutions as well as non-banking related institutions. Banking institutions. So these are the type of financial institutions which involve in accepting public deposits and lending the same to the needy customers. Hello students, how are you all? I hope you are all doing good. So I welcome you to the Unit 2 session in your financial market and services. So in the previous session, we have talked about what are all the importance of financial market for the financial institutions. So who are the contributors for financial market? What are the kind of services that the institutions are going to provide for? So all these that we have spoken in the previous session. So in this session, we are going to completely talk about the financial institutions. So before I give you my introduction, let me introduce myself. I'm Vaishnavi, Faculty of Commerce, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. So straight away we'll move on to the agenda. So in today's agenda, we are going to talk about the definition of the financial institution, introduction of financial institution, then features. Then we're going to talk about classification of financial institutions and functions of the financial institutions. So we'll start with the first topic, introduction. So financial institutions. So if you want to buy a thing, okay, so if you want to buy a book or if you want to buy a pen or if you want to buy a mobile phone or if you want to buy a clothing, your attire, so you need some money, okay. So where you're going to save the money. So you just not keep the money inside your home for a longer period of time. Why? Because it is also having some security issues and it is not advisable. So what is the next thing that you need to do? So you are going to look for that one person who takes your money and who guarantees the security against the money. Okay. So they are the people who usually accepts the money from different investors or depositors. So they accept it and they keep the money and they guarantee the money of the money that they have taken. So this is just basic and context about the banks. Okay. So now banking institutions or financial institutions plays such an important role in India because whatever the transactions relating to the money are being done through only your banks, correct? So if you want to do a transaction, so you need to have a bank account, whether it is current account or savings account or fixed deposit account or joint account, anything. So you need to have a proper account for it. So we'll see the basic introduction of it. So financial institutions are business organizations serving as a link between savers and investors and so help in the credit allocation process. So they act like a link between the investors and the borrowers. Okay. So in simple, financial institutions are institutions that offer financial services for their clients or members. So financial institutions are such kind of institutions who offer the services to the members or account holders of the particular institute. The most probable service is financial intermediation. The institutions include banks, trusts, companies, insurance companies and investment dealers. So who are all the contributors in case of the financial institutions? We have got banks, we have got trusts, we have got any financial companies, insurance companies and investment dealers. So this is a basic introduction of it. So what is a financial institution? So they are the institutors or they are the institutions. So they usually take care of the transactions that their account holder is going to do for. Okay. So they provide the services for regarding your money related transactions. This is a basic introduction of it. So let's see the definition. So financial institutions is defined as an establishment that focuses on dealing with financial transactions such as investments, loans and deposits. So what is the definition of it? Financial institutions are the kind of an institution that focuses on dealing with financial transactions. What are those financial transactions? Whether it is investments, loans or any kind of deposits. Okay. This is the definition of financial institution. So next we will try to understand what are the features, what are the characteristics of the financial institution. First feature is what? It is an institution as well as an intermediary. So it is an institution, that means it is having a norm set of rules and regulations, as well as it also act like intermediary between the depositor and the borrower. Okay. Next is it channelizes savings fund into the investments fund. So financial institutions plays a very important role in initiating or in developing the savings objective in the mindsets of the investor. Okay. Next is about it creates financial assets such as deposits, loans and securities. So it usually deals with the financial transactions called deposits of the amount, lending, loans and securities of the any kind of assets or securities of any kind of underlying asset that the investor is going to have. Next is it includes banking and non-banking institutions. So financial institutions consist of both banking related institutions as well as non-banking related institutions. Next feature, it includes both organized and unorganized institutions. So that means organized institutions are the banking institutions and unorganized are some kind of small chit funds like that will be called as the unorganized one. Next is established with a clear operating function. So they are being established with a proper rules and regulations regarding the transactions or operations of the day-to-day working mode of the institutions. So these are the features of financial institutions. So next feature, regulated by government and regulatory authority. So they are being in the regulatory bodies and they are being regulated by the apex body called, so in India we have got RBI, that is an institution that usually regulates the transactions and regulates the working of the financial institutions in India. Next feature, it accepts the deposits. This is the main feature of it. Any kind of financial institution, whether it is financial or non-financial one, so they are going to accept the deposits. Next is it provides commercial loans, real estate loans and mortgage loans. So it is going to provide lending the loans to the borrowers, that is the investors or to the account holders. So what kind of loans? Any kind of commercial loans or any kind of real estate loans or any mortgage loans like gold loans, etc. So next is financial institutions keep money flowing through the economy among the consumers, businesses and government. So they act like a bridge between the economy and between the consumers, that is the investors or the account holders. So they usually contribute their services in case of keeping the money flowing and easy flow of money in the country. Okay. So these are the features of the financial institutions. So next is about classification of financial institutions. So what are the classifications that we have got? So usually that has been classified into banking and non-banking institutions. So we'll see what are those. So banking institutions. So these are the type of financial institutions which involve in accepting public deposits and lending the same to the needy customers. So these are fundamentally established to earn profit. Okay. The basic objective or the basic feature of the banking company is what? So they are going to accept the deposits from the people who wants to invest in the financial institutions, that is onto the banking institutions, and they are going to lend the money back to they needed any kind of loans. Okay. So second is about to safeguard the interest of the members. Banking institutions ensure that deposits accumulated from people are productively utilized. So next feature is what? To safeguard the interest of the members, to protect the money of the account holders. So the banking institute ensures that deposits are accumulated from people are productively utilized. So next is about the following are the types of the banking institutions which are running in the businesses. So we'll see what are the types of banking institutions we have got. Under that, first is commercial bank. So under the commercial bank, we have got public sector banks, private sector banks, regional rural banks and foreign banks. So and one more bank is called cooperative banks. So these banks are established for the safeguarding the interest of the members. These are organized in a cooperative basis, accept deposits and lend money to the required members. Cooperative banks like in Karnataka, we have got Karnataka Gramina Cooperative Bank. So it is like for the development of the rural areas. It is also there in rural areas of Karnataka as well as in the city areas of the Karnataka. So its a basic objective is what? To cooperate and accept the deposits and lend money to the required people. So next is about the financial institution that provides banking services without meeting the legal definition of a bank. The non-banking financial institutions also mobilize financial resources directly or indirectly from the people. They lend financial resources mobilized. The non-banking institutions are classified into organized and unorganized financial institutions. The non-banking financial institutions, the basic objective is what? They don't provide you any such kind of banking facilities, but still they accept the money inflows in the form of a premium. Like say for example, one of the famous non-banking institution is what? We have got LIC. So LIC is such a insurance corporation company that we have got. So that usually accepts the premium from the insurer, and it is going to pool the money, and later they are going to give back the money to the insurer after the maturity period. So they don't do some kind of banking facilities or banking services, but they also accepts the money from the people. Then non-banking institutions are classified into two types, that is organized and unorganized financial institutions. So the following are the examples of non-banking financial institutions. First is called Provident and Pension Fund. So next is Small Saving Organization, Life Insurance Corporation, General Insurance Corporation, Unit Trust of India, Mutual Funds and Investment Trusts. So all these are the examples of the non-banking financial institutions, so wherein there is no scope of banking kind of services to the account holders, but they also accepts the deposits from the people, but they are being totally different to the banking kind of services. So these are the examples of the non-banking financial institutions. So non-banking financial institutions can also be categorized as investment companies, housing companies, leasing companies, hire purchasing companies, specialized financial institutions like Exim Bank, investment institutions, state level institutions, etc. So we have got Industrial Financial Corporation of India. Like that, I can give you example like IDBI, that is Industrial Development Bank of India. So those are all the non-banking financial institutions that are being specifically set up for the development of the industries in India. So non-banking institutions can also be recognized as some kind of any investment kind of companies and leasing companies, hire purchasing companies, specialized financial banks like we have got Exim Bank, that is Export Import Bank, then investment institutions and state level institutions. So we'll see what are the functions of the financial institutions. So it has been categorized as primary functions and the secondary functions. So under that, first is accept the deposit. So what is the primary function of the financial institution? As I have told, they are going to accept the deposits from the account holder. So whether it might be monthly deposits or quarterly deposits or annual deposits, depending upon the cash inflow of the investor or the account holder. So they are going to accept it, the deposits daily. Next is providing commercial loans. So they are going to lend the loans to the people who are in need for. Okay, so any kind of housing loan or car loan or personal loan or education loan. So based upon the requirements of the consumer, so they are going to provide the loans to them. Next function is what? Providing real estate loans. That is providing any such kind of home loans or land loans to the investors or to the account holders for the sake of the purchasing of any kind of an asset. Next is providing mortgage loans. So providing mortgage loans, like we have got the main important mortgage loan is gold loans. So they also lend you the mortgage loans. Next is issuing share certificates. That means any kind of FDs or RDs that you have opened or any kind of saving schemes that you have opened, they are going to give you the investment certificates to the account holders. So these are the important primary functions. Next is secondary function. They act as an intermediary between the investors, that is account holders, as well as the borrowers. Okay, they act like an intermediary between those two persons. Next is about facilitate the flow of the money. Financial institutions plays a key role here because they are the persons who regulate the easy flow of money from the one place to another place. That means like, so to easy flow of transactions from one person to another person. So without, there is no intermediary called bank, you cannot just send the money to the people. Like say for example, you want to do or you want to transfer some kind of online payment or online transfer to your friend, to your mother, to your father, or to anyone. So by the intermediary of whom we are going to send it with the intermediary of a bank itself. So banks plays a very important role in easy flow of the money from one person to the another person. So next function is provide funds. So one more functions is what? Secondary function. It provide the funds to the investors, and provide funds to the institutions, or it provide funds to the RBI. So based upon like how they receive the deposits and they pool the money and they raise the funds, and they're going to utilize the money for the easy flow of the transactions inside the bank. Next is infrastructure facilities. So financial institutions also provide or also plays a very important role in development of the economy by what? By contributing into the infrastructure facilities in a particular city or town or a particular place. Next is promotional activities. So it also promote different kind of policies or different kind of investment opportunities that they got in the banking institutions. Next is development of backward areas. So with the help of the financial institutions, they can eradicate the poverty. They can also take care of the people who are having the backward area. Next is planned development. So they plays a major role in the development of the cities. Like I've told, how they contribute to the development of the infrastructure. Along with that, they also contribute to the development of the overall economy and overall infrastructural development of the particular place. Next is about accelerating industrialization. So they are the persons who motivates the people to go for startups or entrepreneurship. Like you know that there are many such kind of schemes that usually motivates the entrepreneurship values in the mindsets of the people. So they usually lend loans to the people who are in need of. So they also motivates the industrialization in the country. Next is employment generation. This is also one of the important function here. There are so many crores of people who have got job opportunities with the help of the financial institution, whether it might be banking institutions or non-banking institutions. So many kind of the people who got the job opportunities, and it provides the life and career to the many kind of a people. So these are the important features or functions of the banking, that is financial institutions. So we have got primary functions and secondary function. So in this session, we have learned about the basic concept of financial institution, what is the meaning, introduction of it, what are the features of financial institutions. We have also learned about the different types of it. So what are the different types we have got? We have got two types of it: banking institutions and non-banking institutions. Banking institutions are all the kind of commercial bank, whether it might be rural banks or public sector banks or private sector banks or any kind of bank that usually accept the deposits from the people, and they usually lend loans to the persons who are in need of. Then non-banking financial institutions are like Provident Fund, and we have got LIC, we have got UTI, any kind of mutual funds, etc. So all these will be also considered as examples of non-banking financial institutions. Then we have learned about the functions of the bank. So we have got primary functions and secondary functions. So we have learned about it. So all these are again the important concepts for your examination. In the next session, we are going to learn about the important topics, that is money market. So money market and capital market are such two important topics for your examination point of view. So introduction of money market, institutions of money market, who are the institutions that usually take care of or that usually transact the money market related instruments. Next, the instruments of money market. So what are the types of money market that we have got? Next is capital market, institutions of capital market and instruments of capital market. So these two kind of capital markets are very important here, because that gives you overall picture about the financial system that has been working in India. So this is important, money market and capital market. So we are going to discuss about it next session. So I'll meet you in the next session. Thank you so much.